This is the fraud awareness and tax-related issues explained in Layman's Terms channel. If you're new to this channel, please make sure to subscribe and press the notification button so you can be notified when we upload new videos. If this is your first time, please go back and watch the previous ones as it contains crucial information that will give you the background on what is discussed during this video. My employees cannot cheat on me. They are too loyal to me. Remember the loyal bookkeeper in video 2? Don't let appearances fool you. Make sure that verification is part of your daily routine. Yes, you trust your employees to do the right thing, but don't trust them blindly. Verify before signing whatever it is. There's a saying in French, which means trust but verify. If you don't, you open the gate to an element in the fraud triangle we call opportunity. What is that? Before we continue, if you're new to this channel, please make sure to subscribe and press the notification button so you can be notified when we upload new videos. Because the boss never verifies before signing, there is an opportunity. I can write a check to my niece and include it in the pile of vendors' checks for the boss to sign. Don't give them that opportunity. According to Verity Consulting, ILC, the Association of Certified Fraud Examiners revealed that almost half of small businesses encounter fraudulent activities at some point during their operations. Small business owners heavily rely on their loyal employees and trust them with significant responsibilities. However, it is discouraging to learn that many cases of fraud are committed by those trusted employees. Some of these schemes are subtle and often go unnoticed, particularly when trusted employees have access to the crucial functions of writing checks and reconciling within the accounting department. Below are 3 common fraud schemes they cited. Number 1. Over-ordering of supplies. Small business owners heavily rely on their loyal employees and trust them with significant responsibilities. However, it is disheartening to learn that many cases of fraud are committed by those trusted individuals. The Association of Certified Fraud Examiners revealed that almost half of small businesses encounter fraudulent activities at some point during their operations. Some of these schemes are subtle and often go unnoticed, particularly when trusted employees have access to crucial functions such as check writing and reconciliation within the accounting department. During her 2 years of employment, she began purposely over-ordering supplies and then returning them for a credit or gift card. The credit or gift card was used to buy personal items such as non-perishable food or toiletries that she would take home when she stayed late. Because she ordered and signed for the supplies when they arrived, it was easy for her to hide her personal items. Thus, the reason she would skip lunch to be sure not to miss the scheduled delivery. It was only when the business owner happened to open a box of supplies that contained a gardening set purchased with bonus points that the office manager got caught. She claimed she purchased it so she could grow tomatoes for the business owners. Although the dollars were small enough to go undetected, over time, it accumulated to more than $30,000. Number 2. Payroll fraud. Oftentimes, small businesses use a payroll service to process their payroll and taxes. The timekeeping system can sometimes go unreconciled for months. A recent case involved the review of hourly employee records who were working on multiple projects. They recorded massive hours and were getting paid extraordinary overtime. Upon review and reconciliation of the time cards, the employees were double dipping and charging for projects that were geographically impossible to be working on at the same time. Because no one had reconciled the time cards to the payroll service reports, it went unnoticed until the owners wondered why their financial results had rapidly declined despite an increase in revenues. Number 3. Double payment fraud. A small business's bookkeeper has to inherently be trusted by business owners. They usually have check writing authority, and due to a small accounting department, there is often a lack of segregation of duties. One bookkeeper embezzled several $100,000 by getting approval to pay a vendor an amount over the actual invoice. When the checks were cut, she would write one check to the vendor for a certain amount and another check to herself for the balance of what was approved. The check register and accounting records showed two checks to the vendor for the total approved amount. Due to the fact that bookkeeper also reconciled the bank statements, it was only when the business owner happened to be reviewing checks online when he saw the checks written to the bookkeeper. For many small businesses, it is hard to segregate duties, but under no circumstances should the person writing the checks be reconciling the bank statements on a regular basis. In another incident, Marcus Lane, a 35-year-old PhD, traveled all over North and South America for his job as a geologist for a privately held firm specializing in environmental management and engineering services. Tina Williams, internal audit manager, suspected that Lane was involved in an expense reimbursement schemes when a situation was brought to her attention. Lane submitted a ticket for reimbursement but did not board that plane. She suspected that Lane had not actually boarded flight 4578, but had created a phony boarding pass to make it appear as though he had. As an experienced auditor, Williams was familiar with a common expense reimbursement scheme in which an employee books two separate flights to the same location, but with a huge cost difference. He uses the cheaper ticket for the actual flight and returns the more expensive ticket for credit. And of course, he submits the more expensive ticket for reimbursement. Company policies that employees must book all travel through the company travel agent, but Lane has been booking his own travel since long before I started working here. When I mentioned my concerns over this to senior management, I was told to let it be, that Lane was a loyal and trustworthy employee, and that I had nothing to worry about. Again, the senior manager thinks that loyal employees cannot commit fraud. Don't let your trusted employees destroy your business. If your financial results don't look right and certain expense items seem unusual or high compared to prior years with no good reason, have a professional help to get to the bottom of it. Fraud occurs when employees think they would not be caught. Conducting frequent training sessions about fraud and maintaining anti-fraud controls in place is the best way to prevent fraud from starting in the first place. Conduct surprise fraud audits, and once in a while, let another manager look through the work of the other and vice versa. Once every 1, 2, or 3 years, hire a forensic accountant to look at your books. Make it unpredictable. That will scare them away from even thinking about defrauding you. If you think you need a forensic service to look into your finances for fraud, contact us by sending an email in the description below. Lesson learned: trust but verify. Our next topic will be fraud risk assessment and how to identify the fraud risk your business is facing. Thank you very much for watching and subscribing to the channel. Press the notification button so you can be notified when we upload new videos. Also, let us know how we can improve the content and give us suggestions on the topics you would like us to explain in layman's terms. We are also available if you want us to consult with you on the risk and practical solutions for your organizations.